When a market makes a strong move on volume, this means that the price movement is confirmed by a simultaneous rise in volume. So volume means strength. Volume must increase as the trend develops, whether it's a bull or a bear market. But what if you combine a moving average and the volume in order to read the market momentum or to analyze a breakout trend? Would this tool help you to make better decisions when trading or investing? Sure it can. And this tool is called volume-weighted moving average. So today we'll talk about the volume-weighted moving average. You'll learn the importance of using it, and I'll show you how to use it in a trading strategy. Before we continue, if you are new to my channel, make sure you subscribe, turn on the notifications, and leave us a like to show your support. The volume-weighted moving average is a moving average indicator which includes volume in its calculation. This moving average places more importance on the closing prices which had a higher volume. It incorporates not only the last number of period of prices into its calculation, but also the average volume during those periods. The volume-weighted moving average emphasizes volume by weighting prices based on the amount of trading activity in a given period of time. Prices with heavy trading activity get more weight than prices with light trading activity. This is very important information because you can make better decisions when you add volume into your trading strategy. You could read the volume-weighted moving average in a similar manner to other moving averages. Its main use, however, arises when it's used in conjunction with a simple moving average. So let's analyze a chart with a 50 simple moving average and a 50 volume-weighted moving average. At a first glance, you will see that they pretty much follow the same trajectory. However, on further analysis, you will notice the averages don't mirror each other exactly. The reason for this, as I previously said, is because the volume-weighted MA emphasizes volume, while the simple moving average only factors the average of the closing price per period. So if you pay attention at the volume at the bottom of the screen, you'll notice that when we have a big volume candlestick, the volume-weighted moving average starts moving away from the trajectory of the simple moving average. Then, when we have lower market volumes, the simple moving average and the volume-weighted MA are very close in value. When the volume is stronger, the volume-weighted MA will follow price more closely, and when the volume decreases, it will mimic a simple moving average. When the 50 volume-weighted moving average is between the price and the 50 simple moving average, then volume confirms we are trending in that direction. Look at this example. At the exact moment of the breakout, the volume-weighted moving average was well above the simple moving average already, showing us that the volume confirms the uptrend. The retrace even bounced off from the volume-weighted moving average instead of the simple moving average as support. So, how do you read the volume-weighted MA? A volume-weighted MA moving below a simple moving average indicates bearish conditions. So, if the volume-weighted MA crosses below the simple moving average, this implies that a bearish move is on the horizon. This could lead to a weakening in the bullish trend or a possible reversal. If the price is able to break through both the volume-weighted MA and the simple moving average, a bearish trend is confirmed, and you can start searching for short positions. A volume-weighted MA above the simple moving average indicates bullish conditions. So if the volume-weighted MA moves above the simple moving average, a bullish trend change is likely. Once the price is able to break both the volume-weighted moving average and the simple moving average to the upside, you can start searching for long opportunities. Separation between a volume-weighted MA and a simple moving average indicates a trending market. In other words, if the volume-weighted moving average is between the chart and the simple moving average, then you can have a signal for a trending market. Keep in mind that sometimes the volume-weighted moving average will test the simple moving average as a support and resistance, depending on the primary direction of the traded instrument. These tests can be considered as potential trend reversals. It doesn't mean that the market will reverse, it may continue its direction, like in this example. You just have to pay attention to possible turning points. Both moving averages closer together might suggest an exit point. This signal is pretty much the opposite of the previous one. You look for a contrary signal to the primary trend. For example, you have taken a long position and you notice no separation between the volume-weighted moving average and the simple moving average. This is the moment where you might want to consider exiting the market and collecting your profits. Now let's see how you could use the volume-weighted moving average by its own without the simple moving average. First, to identify and confirm market trends. If you want to trade in the direction of the prevailing trend on the market, a volume-weighted MA can offer some important clues. However, don't forget that a moving average is a lagging indicator, so it doesn't predict new trends, just confirms the market trends once they have been developed. So how do you find and confirm trends with a volume-weighted MA? A possible uptrend is when the price is above the moving average and the slope of the moving average is upward. A possible downtrend is when the price is below the weighted moving average and its slope is downward. The slope of the moving average is simply the direction of the moving average plotted on the chart. Another way to trade using volume-weighted moving averages is to look at them as dynamic support and resistance levels. They are referred to as dynamic because they are not like the traditional support and resistance lines on the chart. They tend to change as price changes. Being so common and followed by so many people, we can often see on charts that the price often stalls or bounces when hitting popular moving averages. Although volume-weighted moving averages are not like the normal support and resistance lines, they tend to behave the same way. As price stays below the volume-weighted moving average several times, it shows high selling pressure in the market. As the price finds it hard to break through, it means that the sellers are stronger than buyers. The volume-weighted moving average above the price becomes a resistance and price is likely to bounce back, offering short opportunities. Likewise, when a price stays above the weighted moving average, it becomes a support and therefore is likely to bounce back, offering buy opportunities. Like any other support and resistance level, price cannot hold forever, and sometimes these levels are violated and price breaks through. You can also take advantage of a strong break below or above the volume-weighted moving average to trade a breakout. A classic way to trade a breakout is to wait for a price retest after a break to avoid a fakeout. Another strategy for overcoming the problem with false signals is to wait a certain number of candles after the moving average line has been crossed by the price before you enter the trade. This way, you filter out a lot of the choppy price movements during times when the market is not showing any clear direction. The volume-weighted moving average helps a lot to smooth out price action. What you need to know is that the longer the moving average, the smoother it becomes and the slower it gets to reacting to price movements. Also, the shorter the moving average, the choppier it gets and the quicker it reacts to price movements. In a fast-moving trend, you will want to use a faster moving average. In a slow-moving trend, a slower moving average sometimes works better. You can set the length of the moving average to suit your trading style. Just remember that prices with heavy trading activity get more weight than prices with light trading activity. The volume-weighted moving average is suited to trend-following strategies because this indicator performs best in trending markets. You can also use the volume-weighted MA in combination with other signals and techniques to get a more comprehensive analysis of the market. Now, if you got value from this video or learned something new, make sure you subscribe, turn on the notifications so you don't miss future uploads, and leave us a like to show your support. Until next time.